is why I highlighted this possibility. Because the opportunity not only for GameStop now, but for GameStop long term is huge. So, Cohen goes in, or the board, it's not really just Cohen's decision, so I shouldn't say Cohen. But they decide to move forward with this increase in share allocation allowed by the corporate charter. And they're hinting, but no official statement, at a forward split. And they say because the price of their stock is too high. Now, when they announced this, the stock trading in the $180 range, now trading at 100, right? Which, I'm sure they knew was going to happen after the obligations were cleared out. There's no way that Cohen isn't, aware of these cycles to some degree, especially given the timing of his buy-ins and stuff. So he's fully aware of the situation going on here, I think. So they know the stock's going to go back to 100, where it's, not unreasonably priced. Like, I don't think most investors have an issue buying GameStop here at $100. Maybe some, but for the most part, that's very cheap, and especially below 100, we see even institutional interest pick up. So splitting now, trading at $99 is not very advantageous to the company. But coming out and saying, due to the decline in our share price, we think that a reverse split is a better decision. They could do it, right? It's I mean, the financial plan has nothing to do with a split, and the split doesn't require a shareholder vote. And by doing so, could trigger a squeeze. It would force a lender share recall without a doubt. Not to mention, the massive increase in price and weighting would cause an extreme amount of volatility, as our shares outstanding went from 75 million down to fucking like 3750. And that increase in implied volatility due to the reduction in liquidity and the widening of the spread would force volatility positions to rebalance, which would cause a Volga-Vana squeeze, most likely. And that, coupled with a share recall, would catapult the price of the stock. And during a market crash condition where GameStop might be staring down the barrel of 10 years of economic decline, think about its market cap, 100xing in a very short period of time. And now they have a billion shares available that they can offer freely from. So you trigger the squeeze, you sell shares at the top, releasing the short hedge funds from their obligations and capitalizing possibly billions and billions and billions of dollars. Then you split the stock forward. Which is what Porsche did to survive the